Good morning, everyone. Welcome to our Friday morning trading room. Oop, yeah, okay, sorry. I almost forgot to get the screen share going on. All right, everything's in order. Not to panic. All right, so yesterday was quite the day, wasn't it? We saw that monster sell-off in the overnight, and then the market did continue lower for most of the morning session, turned on its heels, and pretty much recovered that entire move lower from yesterday. So the bulls alive and well. Trade forecaster here saying we are going to be in trend mode for approximately 160 minutes. So we'll see how that plays out. Hopefully there will be some sort of trend today. It is Friday, of course, and Friday can be a little hit and miss. Scotty's asking a question for you. Where's my trader panel on the right side of the chart? You're referring to the trade manager, I believe. Well, the trade manager is a strategy. So what you need to do is when you open up your chart, you need to pull down here to your strategies, or there's a shortcut here on your menu bar, that little dollar sign. Click on that. If your trade manager isn't already here in the window, you'll have to double click on it so it shows up here in the window. If you've made any changes to your trade manager and you've saved it as a template, well, this is where you would load your template and then just apply it and you're ready to go. Yeah, people get confused about the trade manager because it is a strategy. It is not an indicator. They go looking for it under the indicators and they can't find it. All right, so it's still very early here in the morning. We'll let this play out for a little bit. Dan had some questions about the, oh, Dan, are you in the room? Are you ready for me to go over the Raptor? Just let me know. Dan had some questions about the Raptor. I said I would go over them for him today. Kind of a review on the Raptor for all you Raptor owners. No, maybe not yet. He did say he had something to deal with first thing. All right. Well, in the meantime, we'll just kind of let the market settle in. The hawk here, still a lot of yellow bars. And I guess we've got a little bit of an opening gap this morning too. We're opening at around the 6120 mark. And you can see yesterday when the market closed, we closed around 6100, 6190, or pardon me, 6095, somewhere in that neighborhood, and therefore we do have a downside gap. We'll see whether or not they try to get into that. Yeah, no problem, Dan. We'll wait for you. Just let me know when you're back in the room. I do have to button up the room early today. We're only going to be in the trading room for about an hour today. I do have somewhere I need to be. So we'll see how the day plays out. You can see we did produce a #1 signal here on the Raptor, our cloud crossover signal. But it's early, and well, you could take this trade. There's a couple of options getting in here if you took the trade right on the hash mark. ideally, I try to keep the stops at least 2 swings back. So there's swing 1, there's swing 2. The ideal initial stop is down here. I think that's going to be a little bit out of reach for me, however. The alternative is to do a second push entry, and the second push simply means we allow the signal to engage. We see where the market flinches, where the market reacts, and then we enter above that point. So we enter above there. This enables us to use a slightly tighter stop because now we're looking at some renewed momentum to bring us into the market. But like I said, it's still very early. I don't mind letting the market kind of get its bearings. Sometimes you have to wait a little while for that. Here now we're getting the counter trend. Fridays, of course, can be a little bit dicey. Sometimes there's good trading days on Fridays, but a lot of time Fridays can be a little hit and miss. Back into the hard edge now, where we anticipate a reaction. Scotty, don't apologize. That's why I'm here to answer your questions. Scotty asked, where do I enter the number of contracts I want to trade? Okay, if you're using the trade manager, the bottom half here is what we refer to as the risk manager. By default, it's set at risk percent mode, but if you click on that, you'll see that you go into manual mode. So risk percent manual, it will toggle back and forth. When you're in manual mode, the quantity here will clear up and you can enter the quantity there. So let's say you entered 10 contracts. That means no matter how you set up your trade, you will always have 10 contracts at play. Now you need to be careful when you're using the manual mode because you obviously don't want to end up risking more than you can afford. However, if you're just looking to lock it on a single contract, then that's not a bad way to go. Otherwise, the risk percent mode will always cap your risk at an amount relative to your account. So this is 2% of my capital. I can never risk more than 2%. If I try to risk more than 2%, the trade manager doesn't allow me. It says, nope, sorry, Eric. That's not a trade for you. Scotty, go here to the risk percent line and just click on it, left click, and it will go into manual mode. It will toggle back and forth. Okay, so here now we're coming back with a hard edge bounce. So I'm a little concerned about the multitude of signals here and the lack of follow through. We'll just let this play out here a little bit. You could use a second push entry on this one as well. You can see that had we used second push entries in the number 1 signal, the number 2 signal, and the number 3 signal, we would not be in this trade yet. Very sideways. Well, we could even just throw an OCO order on here. Mr. Buckaloo here is asking, where is the best place to put that stop on that number 2 signal if we were looking at a second push entry on that? Well, the counter trend signal, the one good thing about doing a counter trend signal is that you can normally keep your stops handy. You could probably get away with the high of the morning, which would be right here, just above 61.20. The overnight high is only 2 points further away, so if you could swing that, that would be better still. But at the very least, the high of the morning. If we break the high of the morning, we're probably going to challenge the overnight high also. But you can see we're just kind of flip-flopping here a little bit at the moment, just back and forth. Okay, so here we are at the high. We'll see whether or not they get knocked down from that. there's the reaction to the highs. Which is, again, what we would expect. If the highs hold, I think there's a good chance the market's going to try to get into the overnight gap a little bit, which I'm not saying we're going to see a major sell-off here, but you know, certainly a move back here down to the primary support line at 6102. That would be ambitious, I think. This is a good example of why you can't really make the market do anything. You just have to hang on and get ready to take what they're offering when they're ready. And they may not be ready. Oh, Dan's back. All right. So Dan asked me via an email yesterday what if I could just go over the Raptor elements. And I touch on this kind of as we go, day by day, but it would be a good review for everyone as well. So the Raptor, as I've mentioned before, is essentially a hybrid. It's a combination. It incorporates elements of the Hawk scalper, the Falcon swing trader, and the Eagle trend trader all in one trading tool. In fact, Adam's quite proud that the whole Eagle trend trader was programmed into this filter here at the bottom. The Raptor itself, the primary signal generation comes from the Falcon, which is why very often signals between the Falcon and the Raptor coincide, but not always, because there are also elements of the Hawk scalper in the mix. The Falcon tends to, or pardon me, the Raptor tends to sacrifice quantity of signal for quality of signal. However, you always need to temper the signals with the overall context of the chart. So here, if you're looking at this chart, you can see we've got a market that's been in a sideways mode since, well, certainly the end of the Asian session or mid-Asian session and all through the overnight and European session. So right now, the context not very strong. So you need to be taking your signal prompts with a little grain of salt, shall we say. The Raptor cloud that you see on here gives us our directional bias. And the cloud has two components. We have the soft edge and we have the two hard edges. When the soft edge is stacked above the hard edges, we've got an uptrend. When that's reversed, we have a downtrend. Our high probability signals develop when certain market conditions are met. So the number one signal is, you can think of it as a trend change signal. The number one signal will almost always develop early in an emerging trend. It's there to try to get you on board early. The raptor is saying, hey, all these elements are in place. I think a trend is developing. This is something you may want to pay attention to. So that's the number one signal, the cloud crossover signal. That means that there's two elements that have to happen before the number one signal prints. First, the clouds have to cross. So in this case, because it's a buy signal, the clouds have to go from a bearish arrangement to a bullish arrangement. The second requirement is that there is a pullback. This is the seller's attempt, last-ditch attempt to regain the trend, and it gives the buyers the opportunity to recover the market. When this pullback and rejection happens, that's when you're going to get the number one signal printing. So that's something you want to anticipate. When you start to see the clouds crossing, let's go back here. So you start to see the clouds crossing over. Oh, actually, this one's a little better. The clouds are crossing over. You're going to anticipate the pullback into the cloud. And then from there, you're going to anticipate the cloud supporting the new direction. And when you get your signal prompts, you're going to anticipate a number one signal. That's your cloud crossover. And you can see that very often it does occur near the beginning of a trend. We should have actually labeled the number three signal the number two signal because it's a continuation signal, but we'll address it next. It occurs when there's already an established trend. So the two components for a number three signal are, you first have to have something resembling a trend. And I think it's fairly safe to say that we've got a little bit of an uptrend here, or at least a bullish bias. Sometime during the uptrend, the sellers are going to show up, and they're going to try to push the market back down. When the market gets back into the hard edge, once again, we can anticipate a reaction. When we get that reaction, and the buyers are confirming that they're ready to buy the market again, we're going to, again, get our signal prompts, our audio alerts, and we'll print a buy signal. That's the number three signal, the hard edge bounce. It's a continuation signal. The last raptor prompt is the number two signal, which is the counter trend signal. The two components to the counter trend signal. Well, first off, before you can go counter trend, you have to have a trend, right? There's no counter trend if there is no existing trend. So we're going to pretend this trend's a little bit bigger than it really is, that we don't have this waffling back and forth going on. But let's pretend for a moment that this is our trend. The two components now to the counter trend signal are an existing trend and then a failure of the trend. The failure of the trend simply means the buyers have tried to recover the trend, but they've come up short, and now the market is trying to head the other way. You'll hear me refer to this as a test of the extreme. I didn't coin the phrase, I forget exactly where I heard it or read it, but it aptly describes what's going on. In this case, the extreme is the high price. The market is testing the high, but it's failing. It's coming up short. All of a sudden, the raptor is processing its algorithms, and it realizes that the market conditions may be such that a downtrend could be developing. And it will prompt you with a number 2 signal. So once again, you would like to get into a position where you can actually anticipate this developing, but there's your number 2 signal. Your target for the number 2 signal is the hard edge of the trading band, because that's typically where the market will retrace to. As you can see with this signal developing so closely to the hard edge, it just further confirms that it may not be the best signal that we want to get on board with, especially given the overall context. But let's take a look at this one here. Now this one did not print because it's a little bit drawn out from the high. But this is a number 2 signal. And I'll show you in a moment how you can adjust the parameters if you want to get more of these number 2 signals printing. But this, pardon me, is a number 2 signal. So the number 2, the counter trend signal, is often going to develop when the band is quite broad. When the band gets really, really wide here, this shows you a very overbought market. And conversely, if it was in a downtrend, it would be a very oversold market. In fact, if I put an oscillator on here like a stochastic or RSI or CCI or any one of those, this would show you a very, very overbought market. But you can tell the same thing by the width of the band. In fact, one of our Raptor owners used to make a point of measuring how many ticks the band was, because he got to know his market and he would say, yeah, okay, this band is 43 ticks wide, it's extremely overbought, it's very likely to reverse. And he actually got very, very aggressive with the selling. He wouldn't even wait for the signal, he would just start shorting the market. But here we have a well-defined uptrend. We have a very broad band, and you can see we've had a retest of the high and a failure. The market turns around, produces a sell signal. That is the number 2 signal. And then from there, the market falls off and heads toward the hard edge. Dan asks, can you define overbought, oversold? Sure. Well, it's pretty much as the name suggests, and allow me here, I'll throw a stochastic or something on here. And I'll show you. As the name suggests, an overbought market is overbought. There's too many buyers. They've run too far. Balance is very important in a market. And believe it or not, this morning we have a very happy market. The market is very content where it is right now. For us traders, we don't like happy markets. Happy markets are very difficult to trade because they don't trend. They just end up going sideways. When the market, if you're looking here at your stochastic oscillator, and this will be true for any type of oscillating indicator that you use, but look at what happens. The market, this indicator recognizes that there's some buying pressure. You get some buyers coming in here, and they buy it up very, very quickly. You can tell here from your timestamp. You know, the 5 minutes, another 3 minutes later, another minute later, another couple minutes later. This is all unfolding very, very quickly. There's some very aggressive buying going on here. This now through the Asian session. And about 15-20 minutes later, you can see the market is very overbought. They've got a lot of buyers chasing very few contracts. So the market is out of balance. If you were on a seesaw, you would be tipped way over on the one side of the seesaw. This is what the stochastic is trying to show you. The wide band on the Raptor suggests the same thing. It shows, you know, very normal buying, a nice normal buying progression, but you can see the momentum building as the band gets wider and wider and wider still. Somewhere through here, the buying stops right there, right on our resistance line, actually, at 61.24 3/4. And then it reverses, and the Raptor recognizes it and produces a sell signal. Oversold is just the opposite. Oversold shows you very aggressive selling to the point that the market is out of control on the short side. If I go back to yesterday, we had a massive sell-off. And you can see again the band gets, well, this one not as bad as the buyers, but the band also starts to get rather broad. And then all of a sudden the sellers start coming up short. See right there, they're no longer able to maintain the trend. In fact, you've got something resembling a triple bottom or a head and shoulders bottom, or however you decide to view it. Actually get one more retest, sellers trying one more time to recover the market. And once again, like I said, the band starts to get really, really overextended. We're really lopsided. We've got too many sellers, not enough buyers. And so the sellers start to get out, take profit or whatever, and then the market ends up going the other way. Now, before I see you guys are writing some questions here. Before I get to the questions and before I forget, let me show you how you can adjust your Raptor settings. So go here now to your indicator. Find your Raptor version 2. A lot of the settings are going to be cosmetic and you don't really need to worry about them. But there are some changes you can make to the Raptor. Most notably, you can adjust the cloud sizes and the hawk brick size. For 90% of the markets you're going to be trading, the default sizes will work just fine. If you open up your chart and the daybreak lines are so close together that you don't get any signals, you may have to adjust your clouds and your brick sizes. The alternate settings we use are 4, 4, and 6. So that means we're going to go to a 4-tick hawk, a 4-tick cloud, and a 6-tick cloud. And then we're also going to change our brick size from 8 ticks to 4. But you don't need to worry about that. The only really popular market that requires that adjustment is the E-mini S&P. Typically, anything that trades more than $10 a tick or that has lighter trading volume will require the faster settings. But like I said, for 90% of the markets you're looking at, the default settings will work just fine. So I wouldn't worry about it all that much. If you're confused, you can always shoot me an email or bring it up in the room and say, hey, Eric, what about this market? What do you think? And I'll probably tell you, use the default settings. The other changes you can make here is with the hard edge parameters, you can turn off the trend confirmation. That's going to produce a couple more hard edge signals. The signal parameter is SE. That's the soft edge. That's your number 2 signal. The extreme retest sensitivity. This is where you can adjust the sensitivity of the signal prompt. Yours by default will be set at 1.01. I find that a little bit too restrictive, so I've dialed mine up to 1.25. The higher this value, the less restrictive the signal prompt will be. So for instance, let's go to an extreme here. Let's say I'm going to dial it up to 10. And we'll apply that. And you see, now it recognized these reversals as potential number 2 signals. The problem is it's probably going to recognize every counter trend signal as a number 2 signal, right? So you need to be a little bit restrictive, but that is something that the new Raptor does allow you to do. You can actually make some adjustments to the sensitivity of how you want the signals to display. But like I said, I think if you learn to recognize what's behind the signal, some of these signals aren't going to sneak up on you, even though you may not get the signal prompt. So I find 1.25 to be a pretty good baseline. The next, the minimum bar setup, is actually just the opposite. The lower this value, the less sensitive or restrictive the indicator will be. In other words, the smaller this number, the more number 2 signals you will print. The bigger the number, the fewer signals you will print. You also have the option to switching back into version 1, which doesn't have the signal prompts. I'm not sure why they put that there, but I guess, sure, some people may not want them. And that's pretty much it for adjusting your Raptor. Now, I see there's a few questions here, so yeah, so Dan asks, so a thin cloud is sideways or equilibrium? Yes, you're going to see there's times when your cloud is almost going to twist up like a rope. It's going to be moderately bearish, then moderately bullish, then moderately bearish, and it's just going to go back and forth, back and forth. Times like that, you just need to recognize that I don't have a trend and there's nothing going on. You don't want to be one of these people that, you know, I get people, I've mentioned this before too, but I get people saying, hey, Eric, I got this number 2 signal right here. Or I've got this number 3 signal right here. Should I take it? And this is how they're looking at their chart, because they've got one monitor and they're watching 4 markets. So this is all the screen real estate they can afford. You can't get any idea as to the market context if your chart is only that big, right? You need to pay as much attention to the left side of your chart as you do. Oh, I broke my Geiger counter. Sorry, I'm a little distracted here. Oh, all right. Well, that's new. Oh, there it is. Okay. You need to pay as much attention to the left side of your chart as to what's going on with the current bar. You can not ignore what's going on back here. That's very important, and a lot of people don't get their heads around that. Okay, Dan's asking, can you explain the signals themselves, like the warning dot triangle, when to pull the trigger? Okay, there are a lot of algorithms running behind the scenes here that have to have certain conditions met before the Raptor will start to signal a trade. When about half of the signal parameters are met, the Raptor will produce a warning dot along with an audio alert if you have your audio alerts turned on. This tells you that you want to be paying attention to the raptor, that something could be developing here that could be of interest to you. When all the signal parameters are met, the raptor will produce a triangle and a hash mark. Now, the hash mark is a suggested entry. When we were doing the programming, because computer programs are black and white, there is no gray. We couldn't say, oh, well, maybe we'll wait for a reaction and put the hash mark above there. No, we got to give the program some sort of parameters to base an entry on. So the hash mark will print one tick above the high of the signal bar. The signal bar is the one with the triangle. Or, in the case of a cell, one tick below the low of the signal bar. You're going to notice that sometimes when the market is a little bit slower or a little bit thinner, the warning dot will actually become absorbed. You're probably wondering, well, why is the warning dot after the triangle hash mark? There was a warning dot here when this was forming, but as it formed, the warning dot just got absorbed, and then market conditions were such that we got another warning dot triangle hash mark on the heels. So when market conditions are beginning to get met, you get a warning dot audio alert. When the signal is complete, you get a triangle and a hash mark. Now it's decision time. So all the raptor signals mean that all the conditions in the raptor programming have been met. However, not all the raptor signals qualify as one of the three high probability signals. Looks like I forgot to turn off my sensitivity. So these signals are what I tend to refer to as advanced signals, whereas the ones where you actually get the signal prompt, those are the high probability signals. If you were watching this unfold, you may have recognized this as an early trend change signal. You may be looking at this and saying, oh, wait a minute, those clouds are starting to cross. I've got a little bit of a pullback. Here's a buy signal. Maybe I'll try to get on board with that. If you didn't get on board there, then you certainly should recognize this as a cloud crossover. So these signals without the prompts are, like I say, the more advanced signals, and then the signals with the prompts are the ones that meet all the criteria for a signal. Stephen is asking, is the raptor signal generated before breaking the neckline? Now, if you're referring to the neckline as in a regular rounded top or rounded bottom or 1, 2, 3 top and bottom or head and shoulders top and bottom, no. The raptor signal has nothing to do with typical chart patterns. It does not analyze chart formations. It does take price activity into consideration, but not in that respect. The number 2 signal, however, is programmed to recognize a test of the extreme, given that it meets certain parameters. That's why we can adjust the sensitivity of the retest. But no, it doesn't, if you were looking at this like a rounded bottom formation right here, the raptor is oblivious to the fact that there's a neckline right there. However, that doesn't mean that, you know, you can't pay attention to it. Dan asks, so the defaults are good for Forex as well? Yes, definitely, absolutely. I don't think I've got Forex on this data feed. No, I don't. All right, hold on. We'll put the 6B up here. What? Stop that. Knock it off. There we go. So here's the 6B now. This will be the same as the pound US dollar pair. Oh my gosh, really? Come on. Oh, annoying. Okay, so you can see here's when you load a chart onto your Raptor, what you want to do is you want to pay attention to the daybreak line. So there's the daybreak line, there's a full day. That's kind of the minimum of what we're looking for. If you were looking at your chart and you had a daybreak line here and another one here and then another one here, that doesn't really offer you a whole lot of opportunities for day trading, does it? You'd be sitting here half of the session and you finally produce one signal. Now, if you're going to end up doing it like an end of day trader, that may be well and good. But if you're planning on day trading, that's just not enough activity. Those are the times that you'll need to adjust your brick size. Likewise, if you scroll your chart and you're scrolling and you're scrolling and you're scrolling and you're scrolling and there's no daybreak lines, and your timestamps at the bottom are like 641, 641, 641, 642, 642, 642, you may be printing bars too quickly, in which case you need to do the opposite and you need to increase the values a little bit. But that's very rare. That's more likely if you're trading stocks. If you're trading the stock market, you may have to adjust the brick size relative to the stock that you're trading. What we're looking for is we're looking to get a normal chart, and I'm using air quotes when I say normal. So if you want to know what a normal chart looks like, put the Raptor on crude oil or the NASDAQ or the mini Dow or the Russell or anything but the E-mini S&P. Put it on gold. Did I say the euro already? Put it on the euro. Put it on practically any other market besides the E-mini S&P or any market that trades more than $10 a tick. So, you know, don't do soybeans. Don't do the 30-year bond. And then you'll see what the chart is supposed to look like. And that's what we want our chart to look like. So if you pulled up your pound US dollar pair and it didn't look like this, then again you would know that you'd have to make some sort of adjustments. But like I said, a dead giveaway is you probably have daybreak lines like this, and you'd be, oh yeah, okay, I can't day trade that. There's not enough activity. But like I say, very, very rare. All right, so here now in the pound US dollar pair, we are getting a buy signal. We're getting our cloud crossover. So once again, the clouds crossed, went from a downtrend, moved to an uptrend. There's the pullback. The clouds are supporting the new market direction, so that's a buy signal. And so you could go in and you could say, all right, well, I'll buy it there. And now it becomes a matter of logistics. Where do I want to cover the trade? So that's where the trade manager will come into the picture. Dan asks, is there written documentation about these parameters? Well, we have some written documentation for the first Raptor. We don't have it for the new Raptor, but honestly, Dan, actually, I think Adam did a transcript. It'll be exactly what I'm telling you now. And, you know, you can ask as many times as you need to. I don't get my nose bent out of shape if you ask me the same question 3 or 4 times in a row. It's fine. Ask as many times as you need. But just remember, there's 2 components for every signal. So like the number 1 signal, what are the 2 components? Well, the clouds have to cross and the market has to pull back. And then the market will support the new direction and will produce a signal. So there's our number 1 signal. Yeah, Prashanth, you're absolutely right. He says, I think the saying is look left to be right. And that's so true. You know, people tend to ignore the left side of their chart, but you can't do that. You have to pay attention to what happened before. You need to know, am I stuck in a trading range? Am I in a trending market? What led up to where we are? Scotty is asking, my quantity is shading out, I cannot adjust. Scotty, you got to click here on the risk percent button. When you're in risk percent mode, you cannot adjust your quantity. That is true. It will default to this value right here. Dan's asking, is there a relation between the cloud and the hawk brick sizes? No, not so much. Not with the hawk setting. Or if you're asking here in the indicators, in the settings here, yes, there is a rough relationship. If you want to make a note of this, if you ever choose to adjust your brick sizes, I think it was Phil who might have gone on one of his charts to a 20 tick brick, and he said, what size should I make my other bricks and clouds? All right, here is the relationship between your chart brick size and your Raptor. Roughly speaking, the first cloud is 1.5 times your brick size. Your second cloud is the same as your brick size, and your hawk brick size is 75%, 3/4 of your brick size. So that's the rough relationship between all the elements of the Raptor and your brick on the chart. The alternate settings that we use, the 446 settings, well here, might as well show you. This will, like I say, this is probably something that we're going to be doing if we're trading the E-mini S&P. Okay, so notice our chart looks kind of funny, right? We're producing signals, and the signals seem to be following through, so maybe you want to stay with it, but it doesn't look right, does it? Why is that? Well, it's because I've adjusted the settings on the Raptor, but my brick size on the data series is still wrong. So we'll adjust the data series brick size, make it also the 446, and voila. Doesn't that look like a normal chart? It most certainly does. Now, what the faster settings will do is it will open up the chart a little bit, and that's not bad if you're trading the overnight, which you're probably going to be doing if you're trading the pound US dollar pair. You're going to be looking at the European session, and you can see it's kind of opened things up. But always pay attention to your timestamps. You don't want your signals developing so fast that you can't make up your mind about something. You want at least like 4, 5, 6 minutes between the signals so that you can think about this for a little bit, especially when you're first starting out. And I think I got everybody's question. Now, a really quick overview of the Trade Manager. And honestly, folks, the best way to learn how to use some of these things is put your computer into sim mode and just play with it for a little bit. It really doesn't take long. You know, punch into an order, try different trailing stops, see what happens. You're not going to break anything. And just see what happens when you do certain things on your charts. All right, so Trade Managers, starting at the very top, this is the panic exit button. The world's coming unglued. You need out of your positions. You hit this button, it will flatten all trades associated with this account. It's essentially a shortcut to your flatten everything on your control panel. It will clear all trades associated with your account number right there. The buy sell buttons, buy market sell button, get you into a trade immediately. Close button, get you out of a trade immediately. The break even button will force the trade to break even, providing there's at least a little bit of profit there to get you to break even. You can preset your break even parameters, how much you want to be over the break even number. So right now, by default, break even +1. You can also go negative break even. A lot of people don't know that. The OCO function allows you to do a bracket trade. So if you turn the OCO on, and let's say you wanted to bracket higher and lower here, you need to right click. You can no longer use the set prices button if you're using the OCO. So you right click for your buy, you right click for your sell. These orders are live the moment you put them on your chart. So I usually suggest you put them away and then pull them in to where you want them to be. When one side fills, the other side will cancel. When one side fills, the other side will cancel. Come on. Come on. Really? Stable. There we go. One uptick. Come on. Friday at the UK. Everybody's already at the pub having their pint. There we go. Okay, so we canceled the other order and now we are long. The window here gives you your trade status. You're long one at 132.13. Here's your P&L. You can toggle through it for ticks, percentage of an account, or personally, I don't like to see the P&L go by. Your bid and ask window. Your trail indicator enabled. You'll notice I have it turned off. That is why I don't have a stop loss order. There are 16 different stop strategies here for you to choose from. Please feel free to play with them. The one that sometimes confuses people is the fixed one. You can trail a stop off the close. I'm not really sure why I have the option to trail a stop off the open, but there it is all the same. The high or the low. Let's say I wanted to trail a stop off of the low. I can preview it, and my stop is above. That's not where I want it to be. It's because the fixed strategy uses a moving average to calculate whether the stop should go above or below. So if it's displaying on the wrong side, simply put a minus sign in front and then redo it, and you're going to see it ends up in the right spot. If you're happy with that, click accept and enable it. Oh, and need to click accept. And now you'll see that I have a stop at that particular value. I can also adjust it mid-trade. Let's say I want to keep it 20 ticks back. Let's say I want to go with an ATR stop. Again, I can preview it, I can adjust it, and then I can adopt it. So, like I say, they're pretty much self-explanatory. The fixed tick stop is sometimes one that gives people trouble, and like I said, if it's displaying on the wrong side, simply put a minus sign in front. The set prices submit button, pretty much self-explanatory. The order type, we have 4 different orders here to select. The risk percent mode versus manual mode toggles back and forth. Manual mode allows you to select a quantity. The risk percent mode will restrict your risk exposure to whatever value that is. So currently it's set at 2%. I strongly recommend the risk percent mode, probably because from my own personal experience, that's how I ruined one of my accounts early on by risking far more than I could afford to lose, but I didn't know any different at the time. So long as your trail indicator is enabled, Trade Manager will automatically manage your stops for you. So you can see it's already rolled the stop up from here. We've rolled it up 1 tick. And it's always going to base it on the value of the last bar, not the current bar, rather the last bar that formed. Down here, T1, T2, T3, and R percent, this is how you can split up your trade. I know this is all broken up here. Pay no attention to that. It's just a little glitch from the screen refresh. But currently the trade is at a 50-50 split. So if I were able to take more than one contract, I would have a target at 20 ticks. That would be half my contract. And the other half of my position would be on as a runner. And that's it, everything in a nutshell. But like I said, the easiest way to learn is just to take 15-20 minutes and play with it a little bit and just learn how the features work. If there's something you don't understand, make a note of it, ask it in the trading room, or shoot me an email, and I would be delighted to answer your question. All right, gang, I do have to shut down the trading room a little bit early. Like I said, there's somewhere I need to be this morning. Have yourselves a wonderful weekend, and I will see you on Monday morning. We'll talk to you then. Bye for now.